Okay, guys, welcome to lecture 3 of intraday trading stroke scalping. So please confirm if you guys can hear me and see my computer clearly, please, all of you. Okay, of course, you guys are not allowed to speak. There's no access to speak. All you have to do is to confirm if by saying yes or no if you understand what I said. So guys, the first lecture in this training course, we were introduced to the price action. I had introduced you to the nature of the price, and our scalping training course is surrounded by one principle, and the principle is that the price moves between support and resistance. And when the price breaches support and resistance, she makes another support and resistance, guys. But that is the principle. So always remember this principle. So our scalping training is not based on any lagging indicators or any technicality which eventually will fail to work if the market condition changes. Our trading is based on the nature of the price. And as we know, nature never changes. Yes? So you guys understand? Guys, the first lecture was price action. I introduced you to the nature of the price action. I introduced you to the basic instance of the price, such as movement of the price and the movement between principal support and resistance levels. How does the price breaches a level and makes another support and resistance? We'll also learn how the rules of break and retest works when the price breaches support or resistance and makes another support and resistance. You also learn how to make channels. The price travels between channels, stroke tracks, stroke support and resistance. So, and in lecture 2, I had introduced you to the primary institutional level, which will always be our first objective and aim to take the trades from. We always want to take trades from the primary levels, institutional intraday levels, which were pivots. I show you guys how to put pivots on the charts. Yes, everybody understand them, right? How to put them on the charts. It was pretty easy. Okay, guys, give me a second. And I also introduce you to the secondary levels. And again, you can take a trade from the secondary levels, and the price journey destination will be the primary levels close to that secondary level, which we did discuss briefly. But guys, the class A trade will be from the secondary levels, and the class B trade will be from the class A trade will be from the primary levels, and the class B trade will be from the secondary level. And you guys needs to understand this. So you have the clarity when you take a trade of what kind of trade you're getting into. Okay, you guys understand this, right? And then I show you guys and can prove you the pivots are institutional intraday levels, because based on how many times the price reacts from those pivotal levels. I prove you in my lecture 2, and I gave you an assignment to complete. And I'm sure whoever has completed that assignment will have the confidence in those levels. Yes? Good. Now, lecture 3 is, guys, the candlesticks. Now, the question is, the first question was we had identified the institutional intraday levels. Okay, it's 16. Well, let it run to 5%. So we have introduced ourselves to institutional intraday levels. We had identified them. We marked them on the charts, right? Now the price is close to those levels. Now you want to see when institutional sellers are entering on those levels and when institutional buyers are entering on those levels, because as a trader, your objective is to follow an institutional trader. Yes? So as a first objective, you identify the levels, you mark them on the charts. Objective 1 has been achieved. Now, second objective is that you wait for an institutional buyers to enter on those levels or sellers to enter on those levels, because when institutional buyers enter, you were buying with them, and when institutional sellers are entering, then you will be selling with them. Do you understand your objective 2? It's pretty easy. And all you are doing is following the price, following the institutional traders. Yes? So I'm going to show you guys the tool we use to see if institutional buyers are entering or sellers are entering is called candlestick. That is the tool. And I'm going to introduce you briefly today to this tool of candlestick. And I'm going to show you how to read the candlestick, how to use this tool to understand if buyers are entering or sellers are entering into the market. So you guys understand what we're getting into today. Yes? And then I will give you very few candlestick patterns that you will be focusing whilst trading, scalping, stroke intraday trading, not all of them, very few, and focus on them whilst trading. And then I'll give you at the end your assignment, which I expect you to complete in the next few days. So please confirm if everybody understands today's topic, if everybody understands the importance and significance of today's topic, if you guys understand the connectivity of this topic with the previous topics that you have had in this training. If yes, say yes. Okay, great. Now, the people who have learned the price action training course with me have had an extreme detailed understanding of candlesticks, but guys, take this session as a revision session for those guys who have been previously learning from me, and for those who haven't been learning from me, take it extremely important, because candlestick, this tool is the most significant tool on which you'll be focusing whilst you're trading. Yes? Okay guys, candlesticks. Now you guys know the candlestick. This is the body of the candlestick. Yes, everybody know the body. Let's try and understand how to read the candlestick. Okay guys, we are going to understand the reading of the candlestick right now. This is the candlestick. Yes, so this is the body of the candlestick. Everybody understand this? So price opens here, it opens here, and it closes here. Let's say it's a 5 minute candlestick. So the price opens here, the price fluctuates like this, candle fluctuates like this, right guys? And eventually after 5 minutes, the price was here when the candle closes. Yes, everybody understand this? Yes? And because this candle closes here, I'm going to discuss this because I see a lot of people having a misunderstanding about this. If the price closes here, where would the next candle will be opening from? Of course from the here, right? And candle does this, and eventually, let's say the price was here when the candle closes. So guys, it means the candle opens here and it closes here. You guys understand this? And guys, normally what happens, this candlestick color, these colors are different normally. I'm going to share this to you guys. Okay, this candle color is white. No, it's not going to be white. Let's do this. And this candle color, let's do is blue. So you guys understand this, right? Candle opens here, it closes here, it opens here. Because it closes here, the next candle opens here next to it and closes underneath. Yes, guys, why does the color changes? It's pretty simple. You guys know why the colors changes. Automatically you'll see standard default settings, white and black color. You need to understand this. Pretty simple. It's pretty simple, guys. No, it's not bullish and bearish. The colors doesn't tell you if it's a bullish or bearish candlestick, Ryan. Wrong interpretation. Wrong interpretation. That's wrong. Inverted hammer and hanging man would not be buyers and sellers based on your principles. Try to understand this, guys. When the candle closes below its opening, again I'll repeat, when the candle closes below its opening, in this scenario the color will be blue. Makes sense? And whenever the candle closes above its opening, the color will be yellow, guys. For instance, this candle color is blue because it opens and it close is below its opening. Do you guys understand this? The close is below its opening, guys. You guys understand? Say yes. No, guys, not the previous candlestick. It close, it is below its opening. Yes. And let's say to understand this, Nicole, you didn't understand what I said. Okay, when the candle, this candle opens here and it closes here, right? So when the close is below its opening, the candle color in this situation will be blue. Make sense? This candle close is above its opening. That is where the color is yellow. You understand this? Try to understand this, guys. And this candle will open here. This candle will open here, guys, because the previous candle closes here. And let's say this candle close here. What will be the color of this candlestick? Anyone? Yellow, that's right, because its close is above its opening, guys. So do you understand the relationship why the candle colors are different? You guys understand this basic principle? Yes? Okay, that's good. This is the first thing I want to discuss. I see. And candle colors does not mean it's bullish or it's bearish. First of all, do not base and judge the candlesticks market condition based on the colors of the candlesticks. That is a wrong interpretation. Remember, guys. Yes, you guys understand this. Yes. Okay, good. Everybody clear so far? Yes, I can move forward. Say yes. Guys, this shows where the candle opens and that shows where the candle closes. Now let's do the reading more. Guys, sometimes you see wick like this. Yes, try understand to read the candlestick today, guys. What it means, this candle was open here, right? Price was going up, the price went down. The price was going up, the price went down. At one stage of this candlestick, the price was here. You guys understand this? At one stage, the price was here, but then the price went up and the candle closes here. Now, guys, I'm trying to understand this. This is the candle close, right? This is the candle close. Everybody understand? This represents the low of the candlestick and also tells us that at one stage, the price was here. You guys understand this? You guys understand what this wick shadow, it is called shadow sometimes. Shadow means the price was here before it went up. So during the course of these 5 minutes, at one stage, the price went to these levels. Makes sense? And that was the low level. The price has gone, and that might be the highest level the price was ever there. Makes sense? You guys understand? Say yes, all of you. Okay. Anyone has any questions so far? Everybody's clear, right? So you understand the basic candle formation, right? High, low, opening and close of the candlestick. Yes, and the relationship of colors between candlesticks. Why one is white, why one is black. Yes, everybody clear? Let's move forward. Yes. Okay, guys, now how you should approach the candlestick. This is a tool which show you the market conditions, if buyers are entering into the market or sellers are entering into the market. So remember, listen to me, this very important statement I'm going to make. Whenever you see a candlestick, you will always see a candlestick as a battleground. What it is? A battleground. What it is, again, I'll say, a battleground. You guys understand this? Say yes if you understand this. A battle between buyers and sellers. You guys understand this? A battle between buyers and sellers. Guys, what I'm saying is extremely important. Trust me. You can never become a successful trader without 100% focus on the things that I'm speaking today. A candlestick represents a battleground, and this is a battle between two participants. One is buyers and one is sellers, and both of them want to win this battle. Everybody understand so far? Say yes. You guys with me? Say yes. Come on. I want to move forward. It's going to be a small session. I just want to finish you guys on this. Now, guys, let me keep it sweet, short, so that you guys understand precisely, move forward. Now, guys, understand something. A battle between buyers and sellers. I need to plug. Okay, good. It lasts, I think, 2 hours, 30 minutes maximum. That's what the battery time is of the new Mac, if somebody's interested to buy. Okay, guys, it's a battle between buyers and sellers now, and both of them wants to win this battle. You guys understand? Yes, good idea. Thank you. I will definitely be buying this on this weekend. Sick and tired of it. Okay. Now, guys, what does the buyers want and what does the sellers want? You need to understand, how do we define the victory in this battle? Yes? Guys, buyers objective is to close. This is where the market opens. The buyers wants to push the price up. Buyers wants to push the price up, push the price up, push the price up away from its opening. You guys understand this? Buyers wants to push the price up. That is what the buyers' objectives are in this battle. You guys understand this? And sellers wants to push the price down from its opening, You guys understand this? Sellers wants to push the price down. Buyers wants to push the price up. So when you see a candles, you will see a candle is doing like this. Yes? It means there is a battle going on between buyers and sellers, where buyers are trying to push the price up, sellers trying to push the price down, buyers trying to push the price up again, sellers trying to push the price down. And at one stage, the price was here, the buyers came in, buyers pushed the price up, the price was here, the price went down again because sellers came in at one stage, again buyers kick in, push the price up, and then when the time finishes, the candle stops. And that is where the result of that battle is. You guys understand this? A battle between buyers and sellers. Buyers aiming to push the price up from its opening. The sellers aims to push the price down. The battle continues, hence the candle keeps on moving. And eventually it stops when the time is up. And that is where we see who wins the battle. So you guys understand how you're going to read the candlestick. Yes? All of you. Okay, good. Moving forward, guys. Let's define the victory. Guys, the victory is this. Try and understand this. This is important what I'm going to say. The candle opens here, buyers push the price up, and the price closes very close to its opening. Even though it opens above it closes above its open, but it was close to its opening. Take that candlestick as a neutral candlestick. This is the first thing I want to say, that nobody wins the battle. The victory has to be substantial. Again, I'll say the victory has to be substantial. If there is no substantiality in the victory, just consider it as neutral stroke. Buyers have slight edge. It makes sense what I said? Okay, guys, if market price opens here and price closes here, this is a good victory by the buyers. So buyers are fully in control. Sellers are completely murdered here. Yes, even in better control. This is okay. Buyers did win, not substantial victory. They're not there. So many buyers are not there. They are buyers, but not so many. Makes sense? You guys understand this? So everybody understand this, and vice versa for the sellers. You guys understand this principle? Say yes, all of you. Okay, good. Now, guys, the bigger the body is, the stronger the victory is. Remember this, the first thing. The bigger the body is, the stronger the victory is. It means extreme buyers are in the market. Extreme buyers are in the market. So it's very important. When you see a strong body from its opening, closing above its opening, means strong buyers are in the market. And when you see a strong body close below its opening, it means strong sellers are in the market. You guys understand this principle? Say yes, all of you. Okay, now so this is the first thing out of this. What is a strongest victory? An ideal victory? A big body, right? So that's what we want to see sometimes. Now the next thing is, if you see a long shadow, a wick, it is also significant, because this is what the reading is. This is how the reading will be. Let's say the market opens here. sellers pushed the price down and sellers were fully in control at one stage. Yes, everybody understand this. Sellers were fully in control at one stage, and then buyers came in, not only push the price up and take the control from the sellers, but also close the price above its opening, though it wasn't a substantial close above its opening. You guys understand this? Yes? Guys, try and understand this. This candle is extremely bullish. The reason is, do not just see the small close above its opening. See what happened in that battleground. Sellers were fully in control. This is what happened at the end. Before the candle closes, extreme buyers came in. They pushed the price from this level back to its open, and then even above its opening. So there two things happened. Not only the sellers were demolished in this battle, but also buyers took the ground. Yes, you guys understand this? So two things happen. Not only buyers win by moving the price, closing the price above its opening, but also they destroy the sellers who were fully in control previously. It shows extreme buyers are in the market. So longer the wick is, the strong the buyers or the sellers are. So if the wick is to the downside, the reading is sellers were fully in control, buyers came in, pushed the price up. So extreme buyers are in control. And guys, vice versa. If this wick is to the upside, it means market opens here, buyers push the price up, buyers were fully in control before the candle closes, sellers came in and sellers pushed the price down. Now it shows sellers are extremely in control. You guys understand this? Do you guys understand the reading? So long wick is substantial and big bodies are also substantial. You guys understand? And please confirm if everybody understand how to read the candlestick. It is a battleground, a fight between buyers and sellers, and that is how you will be based your judgment as to who has won the victory. Yes, if everybody understands, say yes, please. Thank you. Okay, guys, we are in more than halfway into the session. Okay, guys, this is the reading of the candlestick. Now, this is how originally you should be approaching the candlesticks. So you don't even need to know the names of the candlesticks. As long as you're doing the reading right, you will always be right. Make sense? You guys understand this, right? But guys, I'm going to discuss few important candlestick patterns. I'm going to make it extremely simple. I'm not going into any details on this because this is a scalping course, right? I want you to stick to basics because keep it simple for this training. Guys, academics have named few candlesticks patterns. They have given name to certain shapes and then give them a character, either bullish or bearish. And we're going to also learn this so that we can refer to them by their names as well. But guys, remember this: when you cannot name a candlestick, when the shape is not the shape given in the textbook, all you need to do is to do the reading of that candlestick and decide what is exactly happening. Make sense? The candlestick pattern may fool you at times, but remember the reading would never fool you ever. Make sense? You guys understand this? So there is significance of reading the candlestick, more significant than the patterns itself. But I'm going to show you the patterns. I'm going to tell you what the patterns you should be focusing on, because if you're debating with another a student of another mentor and you don't know these patterns, and I'm sure I will be criticized as your mentor. Make sense? We can't just ignore these patterns. Okay, so everybody understand so far what I said? Please confirm by saying yes. I'm not going into any details here, guys. Let's be very precise. Okay, let's keep it simple. Okay, for buyers, buying candlesticks. Buying candle can only be at support, guys. So the first thing you need to check is the first thing in any candlestick formation, even before you look at the candlestick and see its pattern, the first question you need to consider is either this candle is forming at support or resistance, guys. You understand this? Support will be a level below and resistance will be a level on the head. Ceiling is resistance, floor is support, guys. You guys understand this? It's extremely important question to consider. First of all, before you go and read the candlestick, before you see the candlestick pattern and decide what pattern it is, the important thing is where it has formed. Now guys, for buying candlesticks, I just want you to focus on these. Mabruzu, I think, is the candlestick name. A candle with big body, that's it. Mabruzu, that's right. You guys, okay. Morobuzu, the first candlestick, a candlestick with the big body is a candlestick you will always be focusing on, guys, and it can also be an engulfing candlestick. This is the candlestick pattern you should be focusing on. Engulfing, G-U-L-F-I-N-G. Everybody understand this, right? It is the same thing. Engulfing means engulfs the previous candlestick, its body engulfs the previous candlestick, but definitely that candlestick will have thick body, guys. That's the first thing. The second thing, the second candle's formation, hammer. Candle with the wick. You guys understand this? Please confirm if you guys understand this. Yes? Okay, good, guys. And for selling, candles are again Marubozu or bearish engulfing. Everybody understand this? This time the body is to the downside. The body close is below its opening. And shooting star, guys. Candle with the wick. You guys understand this? I'm keeping it extremely simple for you guys. The reason is we don't have time in this scalping. When you're scalping, you don't have enough time to go through all those patterns. I only want you to focus on these candlesticks, and that is precisely it. Guys, it's extremely important you understand where the candle is forming. You guys understand this? A candle with the wick or the candle with the thick body, that's all you need to focus on. So please confirm if everybody understands. Yes? Guys, two patterns keep in mind. At support, inverted hammer, which looks like shooting star, is a bullish reversal pattern. At resistance, hanging man, which looks like hammer, is bearish reversal pattern. So keep in mind, guys, these two candlesticks are called tricky candlestick. Mindful of them. Everybody understand them, right? Please confirm if everybody understand them, right? So guys, you understand the candlesticks patterns you have to focus whilst trading, yes? Inducing, these are tricky candlesticks. Again, I'm not going into detail. This is not a training course. I should be going into details on these candlesticks. All you have to do is to focus on what I've given you and the reading. That is it. I'm trying to keep it extremely simple, easy, and precise. So please confirm if everybody understands this. I can move forward, guys. This is the end almost. I'm going to show you a few examples. This is your assignment, guys. How to put your institutional levels. It's pretty easy, guys. It's pretty easy. That's right, sir. Indicators, guys. Then you write pivots, and you have the pivot point standard. You mark them on the charts, and that's it. So that was today. Can you see this today, guys? This is your assignment. I want to see 5 charts where you will be highlighting the candlesticks on which you think that you will be taking your buy and selling trade, guys. You understand this? You guys understand this? Your assignment is 5 charts that you have to send me precisely that the way I'm going to show you in a second, and you need to highlight the candlestick you think you will be taking the trades from. Yes? It's daily pivots here, guys. It's daily pivots. Let's do the daily pivots first. Go to the properties format. Guys, it's daily. Number of pivots back is 15. Traditional daily pivots, that's it. Now, guys, the candlesticks. So this pivot is acting as a support level. Yes, everybody understand this, right? So this is your hammer. Everyone understand? Say yes, guys. Again, guys, hammer stroke wick. You don't have to go through the precise shape of the candlestick. Focus on the body or on the wick. That is what I said. That is why the patterns that I've named have either the body or the wick. Yes, makes sense. Try to understand this, guys. This is R1, R2 pivots. Can you not see it here? It's straight right in front of us, guys. Come on. S1, pivot. R1. Okay, so this is the candlestick. Everybody understand? Everybody understand? There is another hammer here. Can you see this? Another hammer, guys. 2 hammers here. Again, another hammer, guys. Another hammer, guys. Yes? I will classify this another hammer, guys. Yes? I will classify this as inverted hammer. More importantly, candle with the body showing that buyers have entered into the market. You guys understand this? This candlestick, guys, I'm going to show you this candlestick. This candlestick is inverted hammer normally, a bad shaped inverted hammer. First of all. Secondly, the significance is this of this candlestick. It has a body. Buyers are in the market. It candle shows buyers, the candle began, sellers were fully in control. At one stage, buyers came back, pushed the price up. Can you see this? The buyers are in control. Then this candle, hammer. Then this candle, inverted hammer, again because of the wick. But more importantly, it's a candle with the body, guys. Make sense? If your focus has to be on the wicks or on the body, guys, that is it. Everybody understand? Say yes. All of you understand? Say yes to me. All of you. Come on. Hammers. Everyone understand this, right? So I want to see an assignment precisely like this. You guys understand the assignment? And then see this. This candlestick is a shooting star. Candle with the wick. It forms at resistance, guys. It forms at a resistance. This R1 is acting as resistance because the level is above the price. You guys understand this? Yes? And then you got engulfing candlestick. That's right, sir. That's right. Then again, guys, see this. Shooting star. Mabaruzo, guys, candlestick. And then if the price breaches, the level has changed. These candlesticks are hanging man, and then eventually the price breaches the level, and this candlestick is your bullish engulfing, bullish Marubozu. So you guys understand this, right? These candlesticks are hammers. The level has changed. This level has been converted into a support level. Here it was resistance. That is where the shift was. You guys understand? Say yes. Just give me a second. So please, guys, you confirm your assignment, guys. Please confirm your assignment. Now, guys, the funny thing is, if you focus on these candlestick patterns and you just take your trades based on these candlestick patterns from these levels, you will have a success rate of nearly 70%. You guys understand this? 70% the market reverses from these levels, guys. Of course, I will discuss the timings. This is not a time to trade, by the way. I will show you the timings later. You guys understand this? Based on these levels and these candlesticks, if you do statics on 15 charts, you will see 70% of the times the price reversed, the price acted on these candlesticks. So that is how you will be approaching the candlesticks while approaching the intraday trading stroke scalping. So please confirm if everybody understands. I'm going to do another chart for you quickly before I end this. Again, Williams, that comes later in my training, brother. Hammer, Marubozu, or engulfing. You guys understand this, right? Again, you guys understand this, right? Good. What is this candlestick, guys? Marubozu or engulfing? Yes? You guys understand this? If I was trading this based on these levels and these candlestick formations only, I will be buying here, and I'll be selling here. Precisely that's it. And I should have made my 100 pips. Make sense? This is exotic pair, guys. Everybody understand this, what I did? Yes? Guys, if you do not see these candle forming on these levels, skip it. Do not force yourself to find these candlesticks, right? They say this. Also, hammer. Make sense, guys? Yes? James, of course, you cannot classify a candle as a hammer or as an inverted hammer or a bullish engulfing until and unless the candle closes. I do not expect you to ask me this sort of question, by the way. What a question was this? Trust me. Shocked me. Exotic pair. Let me give you another example of another exotic pair, guys. Okay, James, I thought this was your question. So are you taking the trades after the closes on those levels? Well, that's what I understand, brother. Okay, guys, again, let's consider what we have done here. Hammer. Okay, yeah, there was a guy, James, by the way. I don't know what James was it. Yes, I'm not suggesting it's maybe you. Or this is Marubozu or engulfing. Yes? You guys understand this, right? This is your shooting star. This is your engulfing. Morobuzo or engulfing. You guys understand this? Yes? And guys, this is your engulfing again. Yes? I will discuss later which candles and what time not to trade. But right now, the key is you need to identify these candlesticks. Yes, guys? Everybody understand so far? Say yes. Yes? 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 So guys, the point is this: you will only be focusing on these candlesticks and any other candlestick forming. If you don't see these candle formation, don't see these candle formations there. The key is, I'm saying this, you do not try to be over smart here. And scientists, I was really upset and angry. I will be addressing that in my webinar on Sunday. Make sure you attend that webinar. That will be an eye-opener for you guys. But guys, the key is skip it. Move on to the next pair. Makes sense? So let's say you have 10 pairs open. Browse them. You see the candle formation, take the trades. Makes sense? I'm giving you a basic how you should be approaching this. I'm not suggesting you just take a trade like this, but I'm just suggesting that's how you take a trade. Even you just take a trade based on this criteria and you form an EA based on this criteria, the EA will give you 60% results. I can tell you this, guys. 60% results, reversal results. Makes sense? Everybody understand this? The key, auto robot guys, the key when you're trading shorter time frames or scalping is you don't have the time to overthink. So you can't be an over smart, right? You keep things simple, right? You keep things simple. You follow a rules, a set criteria that it fits in, you take a trade. If it doesn't fit in, you don't try to find to fit it in forcefully. You skip it, move on to the next. You guys understand? Of course, I will be addressing these issues later in my training. So please confirm if everybody understand the candlesticks and also understand how to identify on the charts. I have proved you right now in front of me. If I was trading based on the basic principles that I've given, I should be a profitable trader today. Yes? Everyone understand this, right? This is your assignment. You need to send me 5 charts each. 5 charts each, guys. You need to send me and identify the candlesticks, the candlestick with the wicks and the candlestick with the big body. These are the candlesticks I'm really concerned. I don't care. I don't care about any other candlestick. Greg, I said you will always take the class A trade, grade A trade is always from the institutional level. So the question is no. Answer is no to this question. Homework is on 15 minutes. Yes, guys. So please confirm if everybody understand and also confirm if you have enjoyed the session today. Now, guys, listen something. Trust me what I'm saying. Trust me what I am saying, because what I'm saying is not based on some online trader taught me something and I learned from him and utilized on my charts. It started working for me. Absolutely not. This is based on my institutional experience. The bank I work with, the hedge funds I give consultancy with, I know precisely how the system works there. So if I'm telling you something, forget others, focus on what I'm telling you, guys. I am not just telling you, I am proving it's right. You cannot say to me that pivot is not an institutional levels, because pivot, the price reacts and respects 75 to 80%, guys. You can't say to me this. And you cannot show me another institutional level which works with that consistency. That's just not possible, guys. There's a reason for it. And again, pivots are not based on any mathematical formulation, which you normally see on the website. That's bullshit and bollocks. Pivots are the true pivots. Institutional pivots are calculated based on the volatility the following day, what the institution are expecting. And secondly, based on the daily average range, ADR of the pairs. So guys, please confirm if you understand this. So you've got a price action, revise that. You've got institutional levels to mark the primary and the secondary, revise that, and also lecture 3 recording will be uploaded on the website hopefully tonight. So revise these 3 lectures and I will announce tomorrow the next day 4 the lecture 4 and lecture 5, guys. Yes, pivots, the distance between the pivots when they refreshes every night, it gives you an idea of possible institutional mindset. I don't trade like this. No, Ken, I don't trade with the pivots either, brother. My scalping is not with pivot. I'm teaching you a way to trade, an institutional way of trading scalping, easy way of trading scalping. I don't trade with pivots, guys. My accuracy is 98%. Literally, by trading this method, you will be nearly 80% right, which is more than a professional trader's ratio, because professional traders have an accuracy of nearly 60%, 55 to 60%. Makes sense? I don't trade like this, guys. I'm teaching you how to trade. The easiest way. You can't trade just because the way I trade, based because I have been trained, I have an experience. I cannot train you on by those method. Okay, it is a gist of it, but I can't train. The reason is you need to have 6 months with me to be trained the way I have trained. I don't have the time, and you don't have the money to pay me to train you guys. Hence, I have decided to formalize a very simple way, a simplistic way of trading method, intraday stroke scalping method for you. But just following this method, which is based on the nature of the price, trust me, you will be a successful scalper, guys. Make sense? Or stroke intraday trader. So do not say a judge on how I was trading and I'm taking my trade. Just guys, listen and follow my instructions. No reason why you should not be a profitable trader. There is no reason, because there is a reason why I'm saying this, because the method that I'm showing you and how to approach this method is sort of institutional alike methods. Make sense? Again, guys, we are not scalping based on the principle of a strategy, based on the principle of indicators. We are scalping based on the nature of the price action, and also we are scalping stroke intraday when we are following an institutional trader. Yes, that is why my methods are very effective. They always work. So please confirm if everybody understand what I said today, if you guys understand the principles that I've set out for you, and you guys understand your assignments. So get on with your assignments. Send me your assignments. If you have previously sent an assignment, you will receive a feedback, guys, by saying yes or no. So get back on this, and I shall see you soon. And I will announce tomorrow the next lecture, lecture 4 and lecture 5. Thanks, Amani. I hope you enjoyed this session, guys. Do leave your feedback on the post that I'm going to leave on the Facebook. Thank you very much, guys. Thank you, everyone.